Hello everybody, welcome to my new trade recap of last week. So this week I had a 0.35% netto gain, not a lot, but there was also not a lot to take this week in the markets. For me it was the highest thing to take, 1.35%, so it's 1% difference. So what we can see on the first trade, NZDCAD, we had here our high, new low, and then we broke this previous high here. So we are indication of bullish. So after a bullish impulse, we receive mostly of the time a correction, and this was our correction. So the sprinter needed to rest after that big sprint. It's need to rest for the possible next impulsive move. So what we could see is every time we break these lows, we went always higher up. We break these lows here, we went higher up. We break these lows here, and this was a potential move that could go higher up, but we didn't do that. This support acted as resistance here, and that's why I went to the downside. So that's why I wanted to take the buy here with that weekly bullish candle close as an indication for more upside momentum. And then I went to the daily, and on the daily we had our pattern, the shoulder 1 here, had shoulder 2. I drew my daily zone at this IC because it's just falling into that fib. Here is it's just falling, yeah, just out, but this is for me too small to be seen as an invalid fib. So that's why it was valid to take there for me this whole IC daily zone of interest, and that's why I needed to have a pattern there. So I went to the 4 hour, and on the 4 hour we received diesel in that daily zone of interest. First candle, second candle, blue candle, third candle, close. We could take our limit at this box, this yellow box, 1 pip to the upside, and then just 40 pip stop loss till the break-even point, which it didn't went to, and then we went for minus 1%. So then NZDUSD, the next trade. So on the weekly, it's kind of the same scenario. What we had on the weekly was here this high, new low. We broke out of it. This is one whole leg, this low and high, because the wicks go over into each other. So this is one impulse for me. So we are indication of bullish, and after an impulse, what can we receive? The sprinter got tired. We receive some correction counter to the trend, and we can possibly also move with that trend. And we have here some kind of smaller bearish W, first leg, second leg, third leg, fourth leg. So what I saw was we had here our weekly last bullish impulsive candle close. We could break out of that descending channel because we had here our bull flag. So we had here our first candle, first touch, second touch, and then if you drew the fib a little bit better like this, you have your third touch, which is mostly of the time giving us a breakout of it. So which could happen. There is a high chance that it could happen, and also that we could go to the weekly highs here, which there are a lot of sellers. So that's why I wanted to still take that weekly buy setup till these highs possible, and also even a break till the beginning of correction here. But yeah, these were speculations. So we had our weekly bullish candle close. I went till a daily because we had here also our support, which we were above, which could become support here again. Then I went till a daily, and on the daily what I saw was a bullish M. We had a bullish M in our favor. So we had here our first leg, second leg, third leg, fourth leg. We had our 61.80 touch. We didn't touch that daily zone of interest IC, which is not a problem. So we need a pattern. And we received that in the form of a bullish M under the previous lower high. So we had here our first leg, second leg, third leg, fourth leg. I just took the middle of that IC here because there's a lot of liquidity taken mostly of the time at that IC. So I took the middle of it, and then we went to for our minus 60.80 stop loss below the beginning of correction. As you can see, the price likes to take, or banks, institutes like to take here some liquidity at the beginning of correction for more upside momentum to take that retail trades out, which got a tight stop loss. So there I was aware of to do that, so that's why I do it. So then we went to the minus 60.80 for around 2.7%. I took just 1/3 out, and then we went break even. And then I saw again a pattern, this shoulder 1 playing out, had shoulder 2, which we could trade. and then this kind of bullish M here, also pattern within a pattern. And yeah, we didn't go to the upside a little. We just went a little bit to the upside, and then we went straight to the downside to tap that yeah, daily IC here. As you can see, this daily IC is working like a magnet, so that's why we tapped it here. So yeah, that's why. Then GBPCHF. So on GBPCHF, on the weekly, what I saw on the weekly was this is still a bearish trend for the weekly. We had here our high, this is our new low, this is one leg. We are bearish, we have this major bearish W here. So we are bearish, but what could we see after that impulse here? We received a corrective nature counter to that impulse. So at one point, the price is squeezing into each other and we broke out of it. So we broke out of it. So there was a high chance that we could, yeah, now go to that beginning of correction of that weekly highs, because we broke out of that descending channel here. So then we broke out of it, and that's why I will also want to take a buy setup, because we had some room till that beginning of correction to take the long setup. So we had that weekly bullish candle close. So then I went to the daily, and on the daily, what I saw here our first leg, second leg, third leg, fourth leg going back, the bullish M, and we went to the daily lows here, and then I had a diesel. So we had here our diesel. In which way? We had here our first blue candle wick. Then we had the second one, so the first, second, third close. So then I could take my trade. I just took a marked execution, sorry. And yeah, the spreads were a little bit higher than I expected. So that's why I was tapped in a little bit higher. And that's why, yeah, this was also a loss. But if I just tapped with normal spreads in, then it was also a loss. So this was just followed by a planned deceleration, and then it went to the upside till that daily high zone here. As you can see on the daily, we just tapped the daily highs here, and then we went back to the downside. So that's why this was a loss, and just a trade followed by a plan. Then GBPCAD. This was a very nice trade of me. So I will explain why I took it. So on the weekly, what can we see on the weekly? We are very bullish. We have here our first leg, second leg, third leg, bullish M playing out with that kind of here, smaller shoulder one, head shoulder two, liquidity got taken. Within that, again, shoulder one, head shoulder two. So I was looking for that short till that shoulder one, head shoulder two, because here is some clear support, resistance, potential back support, and we received that bullish candle close, impulsive one, with here that high and this low here, this high wick. We had here weekly liquidity taken from the bank. So if we had a price above that weekly high here, wick, then the banks and institutes like to take some liquidity for more downside momentum, which is aligning with that shoulder one, head, shoulder two pattern. So that's why I wanted to take it for a short, even if you had a bullish pattern, bullish trend, smaller bullish pattern, and the weekly candle against us. So that's why I wanted to take it. And I went to the daily. And what I saw on the daily, we just didn't broke these daily highs. We had just not a confirmed break. This was just a small break, not closing above that daily week's highs. So we had our weekly liquidity zone here and we touched it. So then I was looking for a pattern that I wanted to trade till that shoulder one here had potential shoulder two within that bullish M that could play out. So this was the daily TP I was looking at for around 5% till that shoulder one region, which it did. So I went till the 4 hour. And what I saw on the 4 hour was we had here our high. We just closed above that. We just closed. And then I want to see a red candle closing below. So this red candle closed below that 4 hour reverse point there. This was our 4-hour reverse point. This one, we just closed above it, then below. And then I wanted to take the trade. And then we went to the downside. So the banks took some liquidity and we went to the downside. Here I was running around 1.8. It just didn't took me out and then took some partials out, which was here a mistake of me. I took here all the partials out, 1/3 here, and then a little bit higher here for around 3.4 something, 3.32, which was a mistake of me that I took here a lot of, the 2/3 out, which I needed to wait for the daily TP. So that's why I had here around 3.4% gain instead of 4.6 that I could take. So that's that's a shame. So this was because of emotions, and I was already running minus in a huge minus week for my FTMO. So that's why I was just taking here some profits out to be sure. So then I could take the hedge, but I wasn't looking at the charts because I was sleeping. It was around 3 o'clock at midnight in the morning, even 3 at midnight, yeah, even morning. So this was a diesel. This was a possible hedge because we had here our daily Emerson and shoulders, and you could take the hedge. And yeah, this was just running then around 1.4%, and then you could go break even. So it was a break even trade then. Then the last trade AUDCHF that I took. So this on the weekly, what can we see on the weekly? We were still we were still bearish. This was our high, new low. We made here a kind of smaller bullish M here for potential more upside momentum. We had our weekly candle with us, so we could go potentially more to the upside till this weekly highs, which is a very nice supply and demand zone here. Support, resistance, potential resistance. So this could be a nice zone to take some partials at. So I wanted to take the long because we had some space till weekly highs. So I went to the daily, and on the daily, what I saw was this large bullish M. Here our first leg, second leg, third leg. This is one whole leg for me. Then the fourth leg coming back, we tapped our 61.80, but we had also a natural M. Same highs, we expect same lows. We didn't had here an entry. This was then the break of that daily low wick here from that natural M. So this wasn't valid anymore. And I was looking just for that bullish M here. 61.80 got touched with a 4-hour pattern, and on the 4-hour we had here a bullish M under the previous lower high. As you can see, the 61.80 is falling into that IC here. As you can see, we formed a bullish M, and then I was taking my limit around the middle of that IC, stop loss below the beginning of correction, and then we went to the downside very impulsively to tap that daily lows, which we didn't hold, and then we went further to the downside. So this was also trade followed by the plan. So this was my trade recap of this week, everyone. So I hope you liked it, and see you next week. Bye.